Good afternoon, everybody. It's Tuesday. It's Fed Day. It's August the 7th, 2007. We got some time to kill going into the rate announcement here. And by request, I'm going to make a very short lesson on a trade that worked really well. This case study on one of the five white guys who runs Wall Street, Goldman Sachs, and we only took this as a day trade yesterday, and this is good proof that swing trading is always more profitable than day trading. Yesterday, we started looking at a day trade in Goldman, and when a bull hammer candle formed, and you can see it down here where I'm clicking on the Mr. Mouse right about in there. This candle does not look that impressive because of the scaling that I'm using in that small chart, but it was nice and clear to me on my e-signal screens over on my bigger ViewSonic monitor. What caught my eye was the length of the lower shadow, and it was just a beautiful textbook bull hammer. That was signal number one. That got me into alert mode on Goldman. How did the trade develop from there? At the same time, we were watching Money Stream, and we were watching it in the context of the multiple moving average setup we call the rope. And what I was looking for was some indication that the rope was going to start to be penetrated by Money Stream to the bull side, and you can see where that occurs right about there. So the low on Goldman had come in yesterday about 175. When we finally started seeing an indication that Money Stream was crossing the rope, we were up into about the high 176s, 177 areas on Money Stream crossing the rope, and price was starting to form, and then we got an excellent go candle here, which seemed to be a confirmation of the two bull candles down there. We entered that trade with a trailing stop of the low of the day, and we continued to trail it up higher and higher, and some of us got taken out when we had a dip back down to the 179 area, which you can see right in here. That's what happens when you day trade with really tight stops, guys, especially on a stock like Goldman. It's not unheard of to get a 1 or 2 point wiggle, which is enough to take you out of a day trade. But on Goldman, 1 or 2 points is frankly nothing. Goldman has an average true range right now of 8 3/4 points per day. What else made this trade a good one? You notice right after the cross of Money Stream into the multiple moving average setup, there was also a cross of time segmented volume through its own moving average. And then a little bit later, after that, probably when Goldman had climbed up into the 179 area, time segmented volume would have cleared out its zero line as well. Further indication that a bullish trend was developing. And then look after that, balance of power went from, pretty big boy motivated big player selling. It waned into a neutral bias, and then balance of power started to show signs of retail buying, which much later in the day turned into real money buying. And now you've got what's going on today ahead of the Fed. Most of the investment banks are running well. What would have kept us in this trade? Money Stream, if you look, came down to test the multiple moving average setup, but it never turned south. It hit that and bounced and kept going higher. Goldman now is 18 points higher than it was when that bull candle formed and gave us an alert to think about getting long. Time segmented volume did come down, and it did breach its moving average only for a bit, but it stayed well above its zero line and remained bullish there. Balance of power has gotten a bit schizophrenic today. That's not that unusual given the fact that we're pre-Fed. All of this has been on a 15-minute chart, so you understand the context that the trade took place in. I hope it's instructive. First and foremost, always look for a bull hammer candle. Then look for your other tools to come in and confirm what you think you're seeing in the candlesticks. I'm KingCAMBO. That's how I roll on Goldman Sachs for Tuesday, August 7th, 2007.